If you own a property, you have a decent portion of equity and you're looking to finance a second property with that cash, I'll run you through your options. Home equity is essentially the part of your property that you own outright, the difference between the property's value and the ongoing mortgage. This equity can be used for a second place and applies whether you've paid off your home completely or still have a mortgage. If you own your property outright, you can access this equity through an unencumbered mortgage. If you have an existing mortgage, remortgaging offers a way to access a greater sum than your current loan. This step is vital whether it's just for a complete purchase or just as a deposit for a second property. When applying for a remortgage, it's important to show lenders that you can manage the refinance mortgage and any new debt secured against another property. The first step in this process is to determine how much equity you have. This involves subtracting any remaining mortgage from your property's value. Lenders look at the loan-to-value, LTV, ratio to determine this. It's your mortgage balance as a percentage of your home's value. So for example, if your home is worth 100 grand and you have an outstanding mortgage of 75 grand, then your LTV ratio is 75%. A lower LTV ratio generally means more favourable deal options. The type of property you plan to buy with your equity is also important. This could be a holiday let, a buy-to-let, or even a commercial property for business use. Your choice here will influence how lenders view your application. Most lenders prefer properties constructed with traditional materials like bricks and mortar. Financial considerations like your income, employment status, and credit profile are also critical. Lenders usually limit borrowing to around 4.5 times your income, but this can vary based on your circumstances. If you're self-employed or have a non-standard employment situation, there are lenders who specialise in these areas. Even if you have a less than perfect credit history, there are specialist lenders who may offer tailored solutions different from traditional lenders. I'll give you more details about that in a sec. If you've inherited a home, you can also use its equity, providing you've legally taken ownership after probate. However, most lenders require a minimum ownership period, usually between 6 and 12 months. Another option is a let-to-buy mortgage, which allows you to rent out your current home and use the income to fund a new purchase. In some cases, you can transfer your existing mortgage to the new property. This process is called porting. Using home equity to buy a second property is a practical goal with the right planning and advice. If you're considering this step, exploring the option of remortgaging could be your first move towards a second property. Before committing to a secured loan, it's important to find out how much you can get and how much it'll cost without hurting your credit score. I've partnered with a company who can provide a free quote so that you can start to understand what's available to you. Fill out the form for a free quote. I'll leave it below this video for you. And if you use this link, you'll be supporting Thrifty Family. So thanks.